In terms of the concept of partnership, a lot of the securities financing business is driven by relationship. One of the benefits of partnering together with other institutions was to create this win-win situation. The idea that we could leverage our own technology, our own expertise, but at the same time partner with institutions who the client had a preference or a choice of using. During the past 18 months, we've announced partnerships with BNP Paribas Securities Services, with Citi, and more recently with Standard Chartered. It's been designed to actually then select those premier institutions which clients like to use. It also gives us a lot more global coverage in terms of the type of inventory that we can help our clients mobilise. But as I said, it's a nice complementary mix of doing what we do as an infrastructure provider of collateral management, together with the financial institutions who are offering other services to those clients, and it's the mix which we feel is beneficial to the market. The European market has traditionally, on the tri-party side, been driven by banks and broker-dealers. The US market, by contrast, has actually involved the buy side now for a lot longer. The interesting thing that we're seeing is that the US market model is becoming a lot more like the European model mechanically, but at the same time the European market, which has this efficient DVP mechanism of tri-party, the idea that you can actually then collateralize cash and securities at exactly the same time. But the regulations are encouraging then more of the non-banking community to come in because they are the risk takers, and more importantly, that is where the real liquidity is. On that note, I think the interesting thing for us as an infrastructure provider is that the buy side is not our traditional client segment, to be frank. And one of the things we've always been relatively cautious is that a lot of our traditional clients are the services of the buy side. And so therefore then the idea of actually partnering together with some of our existing clients to offer services to the buy side is the way of actually us maximising our sales and our marketing reach, but at the same time it also allows then our clients to leverage their existing service and product base to add collateral management to their suite of services. There are two core areas that we're focusing on. The first one is in the business of white labeling, specifically as an infrastructure provider with a collateral management technology that we've been developing now for over 20 years. We're keen to try and leverage that technology and the expertise to help fellow infrastructure providers also improve the robustness of their own collateral management framework. We have an initiative called Liquidity Hub Go, which is where we are partnering together with infrastructure providers around the world. Specifically, it was a service which we launched in Brazil with Cetip back in 2011. We've also now rolled out that product to be launched in Australia with ASX, with Straight in South Africa, with Iberclear in Spain, and also now CDS in Canada. The intentional design of the product is to give the local infrastructure provider a collateral management service of their own that has the look and feel of the classical tri-party service, but it has the name of that provider on the boilerplate. So in other words, you don't see the Clearstream name within that local market at all. Having said that, the bigger picture for us is looking at this interoperable collateral network. The idea that you can actually then mix the balance of the local collateral needs with the demand and the desire of the international community. And by offering then a harmonised piece of technology which overlaps the two, what it means is that you can give local central banks and local regulators comfort that collateral can be mobilised in times of stress and in times of need, but at the same time the international dealer community, which want to actually mobilise their global inventory pool in one location, also get the same benefits. At the same time, what we're also working on is a number of innovations to try and help innovate new liquidity come into the market. The initiative we use comes under the names of Collect and Select. Collect is actually where we're working together with a number of vendors and specifically platforms. We have a partnership with a company called 360T, who are a B2C cash management platform, and where we're leveraging their corporates capabilities to actually then bind and attract corporates into the tri-party repo markets. We're also working together with Bloomberg to also try and help clients automate the voice traded tri-party transactions a lot more. Similarly, then we also have the Select initiative. The Select initiative is focusing specifically on the buy side. And there's a nice overlap between the Select segment and the other products that we offer within the Liquidity Hub to say that we can actually partner together with a customer's custodian or a customer's house bank so that they can actually choose to access all their services from a one-stop shop, but at the same time they can also leverage the potential of this now growing global collateral market.